Did you know that Cathie Wood, the winner of the Tesla Bowl, revealed a shocking fact regarding Tesla's stock? Many investors and analysts agree that Cathie Wood's statements are persuasive, yet it is important to pay attention to the news. Concern over Tesla shares decreased. Many people have their eyes on the current stock market prices, especially Tesla because it is the leading automaker for electric vehicles and they heavily rely on the advice of experienced investors. Who wouldn't when they have years and years of experience under their belt? Tesla Elon Musk, the CEO, is well known for both positive and bad things. In this video, you'll learn what shocking revelation he recently made. Regarding Tesla shares, Cathie Wood made a mistake. Tesla is an American automotive and renewable energy company that develops, produces, leases, and markets electric vehicles, energy generation systems, and energy storage systems in the U.S. and other countries with an eye toward the future and the environment. According to Forbes, Cathie Wood is who she claims to be and why her opinions are regarded as authoritative. Founder, CEO, and Chief Investment Officer of ARK Invest, a $60 billion corporation that makes investments in cutting-edge technologies, including self-driving vehicles and genomics, is American investor and star stock picker Cathie Wood. Cathie Wood is frequently referred to as the most underestimated investor in the industry, since she not only makes excellent investing arguments, but also has data to support her remarkably astute statements. Adam Jonathan of Morgan Stanley, another well-known Tesla bull, claimed that the current market for electric vehicles is a race, and Tesla has been leading so far. He metaphorically compared the EV industry to a marathon and said that Tesla leads at mile 21, while other companies are still at mile 2 and others are still tying their shoes. He supported this claim by stating that recent records of car deliveries are evidence that Tesla's position remains strong and is strengthening as the marathon progresses. The move and other investors' decisions to update their valuation of Tesla stock led some to believe that the stock is overvalued and not justifiable. But if Tesla can maintain its 50% growth rate per year, it may be just as successful as the investors. He also revised the price target for the automaker shares to $1,300 from $1,200 and went on to predict that the delivery figures would reach 2 million this year. Delaney also highlighted the significance of Tesla's leadership in the development and production of electric automobiles. He continued by saying that the increasing popularity of electric vehicles might boost the company's revenues. It is known that many automakers, including renowned and well-established ones, are vying to catch up with Tesla's technology and infrastructure. Therefore, Tesla needs to move quickly in order to hold the lead position and maintain a safe distance from companies. The reason for these bullish assessments is that the adoption rates may not turn out exactly as he wrote. In addition, he said that a slowdown has the potential to curtail Tesla's lead and that of its competitors. In order to keep the factories and plants operating, Tesla switched suppliers and rewrote its software. In fact, Tesla opened 2 new production facilities in Austin and Berlin, aiming to increase production alongside the Shanghai and Fremont factories. These developments may indicate an increase in operating margins and scale to produce cars. Be remembered to hit the subscribe button and the bell notification credit to stay current with our videos. The opening of Berlin and Austin allowed them to reach better gross margins. With the stock market in its current state, Swiss analyst Dan Levy recently increased his price target for Tesla stock from $830 to $1,125. He said the share's recent decline is an attractive entry point and that he expects the company to surpass Wall Street expectations. It is thought that a recession in the United States is extremely likely to occur. Cathie Wood is known for giving monthly updates about a variety of topics, including monetary and economic policies. A recession is defined as 2 consecutive quarters of declines in gross domestic product in which the state has already experienced one, and there appears to be one in sight either in the second or third quarter. If it were to be positive in the second quarter, but go negative in the third, that would technically not be a recession, but for Cathie Wood, it is close enough. In a recent video, Cathie stated that the Fed's decision to raise interest rates by 50% was incorrect. She also mentioned that the United States could potentially enter a recession, and that as a result, she deemed that the move to raise interest rates is wrong as it is not the right time because there is a lot of pressure on the economy. The Federal Reserve System, also known as the Fed, is the central bank of the United States and regulates the country's monetary and financial system. She stated that the Federal Reserve's plan to raise interest rates to 50 basis points would be a mistake. In addition, she stated that the markets concur with her statement. She claimed that the stock market experienced a spasm. Towards the end of the video, the S&P is down 15% from its peak, and the Nasdaq is down 25% from its top. According to Wood, the claim that innovation cures problems may soon become a catchphrase. This is because margin erosion, which may be giving disappointing returns to businesses that aren't regulating their spending, may be remedied by deploying more automation and raising productivity, is in line with this. Despite this and the present decline in stock prices, employing innovative tactics may be a strategy to reduce costs and maintain margins. Tesla has proven itself in the first quarter of 2022, and investors are keeping an eye on new developments. For example, on March 22nd, Tesla officially opened its German plant near Berlin, supplementing the auto assembly plants in Shanghai, Texas, and California. On March 28th, Tesla disclosed plans for a stock split, subject to stockholder approval, to increase the company's authorized number of shares at its 2022 annual meeting. Additionally, on April 20th, Tesla reported a Q. Despite numerous unanticipated events, such as the COVID pandemic and the war in Ukraine, which had a significant impact on the global economy, Tesla continued to build the Tesla Gigafactory with the aim of accelerating the global transition to sustainable energy through increasingly affordable electric vehicles and energy products. The Tesla Giga Nevada, also known as the Tesla Gigafactory, is a lithium-ion battery and electric car component factory in Story County, Nevada. When completed, it will be the tallest structure in the world and run entirely on renewable energy, achieving net zero energy. This building aims to end Tesla's battery shortage. It is obvious for investors to be thorough and cautious in where they put their hard-earned money. Several well-known investors and analysts were mentioned throughout the video who had established experiences in their respective fields, so their words should mean something valuable. Their statements are backed by this news about Tesla, which shows how the company continued to flourish despite the numerous roadblocks.